Before 1996, if you had to invest in a particular stock, there was a paperwork that had to be done where a physical certificate would be issued on your name from the stock exchange. Every time you buy a share, you get the physical certificate. Just imagine the huge amount of paperwork involved in this process and how cumbersome it would have been. But then there was an introduction of Demat account that stores the information in electronic form. This reduced the entire paperwork and made the trading process very efficient. So every time you buy a share, the information is stored in your Demat account, and it was made compulsory to open a Demat account before you start investing in Indian stock market. And that created an opportunity to provide digital services to millions of shareholders in India in the form of a Demat account. It gave birth to two companies, NSDL and CDSL. In this video, we are going to do the fundamental analysis of CDSL. Hello friends, my name is Sahil and this is my Personal Finance Academy where I explain everything about money management in layman's language. This is the 32nd episode of Stock Fundamental Analysis, and as usual, we'll start with understanding the company and its business of CDSL, its leadership, its competitive strength, competitors, key risk, future growth prospect and financials to decide if CDSL is fundamentally strong or not. Then we will cover the valuation analysis to understand if it is worth investing in the company at current levels or not. But before I proceed, I want to clarify that my stock analysis is only for educational purpose. A lot of people request buy price and target price, but I don't provide that. This video is only for long-term investors who want to invest in fundamentally strong companies for long-term wealth creation. To learn more about how to pick fundamentally strong company, you can explore my video course. There are already 3,500 plus enrollments in the course. Alright, let's get started. Established in 1999, CDSL stands for Central Depository Service Limited. Initially promoted by BSE, that is Bombay Stock Exchange, CDSL received its license of depository from SEBI in February 1999. Now before we proceed further, let's first try to understand what exactly is a depository. So a depository is the entity that holds your securities like your stocks, bonds, mutual fund, etc. in Demat form, that is dematerialized form. Or in other words, the depository holds your security in electronic form. As an investor, if you want to invest in stocks or bond, you need to open a Demat account. This Demat account is held with a depository and all your shares, bond, etc. are stored with them. Now there are two things here. One is depository and another is depository participants. As mentioned, the depository holds your securities in Demat form. But as an investor, when you need to open a Demat account, you need to reach out to depository participants who are the agents of depositories. So these depository participants are registered with depositories. Normally your brokerage firm also acts as a depository participant. For example, Zerodha is a brokerage firm, but it also acts as a depository participant. Zerodha is the depository participant of CDSL. I hope now you understand the difference between depository and depository participant. Apart from this, CDSL also facilitates settlement of trades executed on stock exchange, then facilitation of annual general meeting, updating shareholder related details, online access to securities, execution of secure transaction and so on. CDSL has three major subsidiaries. First is CVL, which is the largest KYC registration agency with over 2.5 crore fully digitized KYC records. Next is CIRL, which is CDSL Insurance Repository Limited with 5.86 lakh e-insurance account as of December 20. Next is CCRL, which is CDSL Commodity Repository Limited. Recently, CDSL made a record to open 3 crore plus active Demat accounts. In fact, till 2020, the company crossed 2 crore Demat account, and in the last 1 year, there has been a huge surge of Demat accounts for CDSL. As of today, there are two depositories in India. First is CDSL and second is NSDL. So you can imagine that every time an investor needs to open a Demat account, the person has to take service of either of these two forms. We will discuss more about CDSL versus NSDL in the competitor analysis. If you look at the leadership of CDSL, Mr. Nehal Vora is the MD and CEO of CDSL. Mr. Nehal has more than 2 decades of experience in the security and regulation market. He started his career in 1996 with SEBI. Later, he headed the brokering and investment banking compliance of DSP Merrill Lynch Limited. He joined CDSL as CEO and MD in 2019, and before that, he was the Chief Regulatory Officer at Bombay Stock Exchange. So he's got a huge amount of experience and has been instrumental in the growth of CDSL since he joined in 2019. As of today, CDSL has a total market cap of around 10,000 crore rupees. Overall, on the company, its product portfolio and leadership, I would rate it 10 on 10. Its first strength is that it is India's largest depository. CDSL is India's largest security depository in terms of number of accounts, with the highest share of incremental growth of Demat account, along with having the largest number of DPs registered in the depository business. There are 600 depository participants registered with CDSL, including Zerodha. Second strength is cost leadership. Due to its centralized database system, state-of-art technology, and robust IT infrastructure implementation, CDSL has a relatively low-cost model for DPs with minimum incremental cost. This gives them the cost benefit over the competitors. Third strength is stable revenue base. CDSL has a very stable revenue base due to repeat business in multiple offerings in the Indian security and financial service market. Fourth strength is high economy of scale. Due to the market leadership, CDSL has achieved an economy of scale with presence all over the country that has resulted in lower cost structure for the company. Fifth strength is experience management. CDSL has a very experienced management with an average experience of 25 plus years for its management team. If you look at the competitors of CDSL, there are only 2 depository participants in India, CDSL and NSDL. CDSL is promoted by Bombay Stock Exchange, that is BSE, and NSDL is promoted by National Stock Exchange, that is NSE. However, CDSL has high number of Demat account as compared to NSDL. If you look at the chart, till 2017, the competitor, which is NSDL, had higher market share, but recently CDSL has surpassed NSDL with 58% market share by 2020. Overall, on competitive strength, I would rate it 9 on 10. If we look at the key risk, first risk is dependency on the market performance. So CDSL revenues are based on trading volume, which are dependent upon market performance. The total number of new Demat account opening is also dependent upon the stock market performance. So in the future, if the stock market does not perform well, then it can result in closure of Demat account or slowdown in new Demat account opening. Moreover, it would impact the trading volume, which would directly impact the company's performance. Second risk is cyber attacks and cyber frauds. CDSL is the depository of 3 crore plus Demat holders. Now this is a big responsibility, and that also requires CDSL to keep upgrading its technology infrastructure to avoid the risk of cyber attacks and cyber frauds. Over the last few years, there has been a huge surge in the total number of new Demat account opening in India. More and more people are now actively investing in the stock market and mutual fund. This is due to multiple reasons. The first reason is due to high growth potential in Indian economy. India is one of the fastest growing economy in the world, and it is bound to become the third largest economy in the world after US and China. India is already one of the biggest consumption market in the world. The salaries are rising, spendings are rising, and government is spending billions of rupees in building the infrastructure of the country, and this would create huge growth opportunity for Indian economy. And when the Indian economy would grow, more and more investors would want to be a part of Indian economy, and this would attract a lot of investors to open the Demat account and invest in Indian economy via stock market and mutual funds. Second growth driver is launch of new IPOs. There's a lot of craze towards IPOs in India. Everyone wants to be a part of growth journey of potential companies from the beginning. This results in huge amount of Demat account opening. and there's a long list of potential IPOs in the pipeline, including LIC, Zomato, Paytm, and many more. This would result in huge surge in the demat account opening and eventually result in more profits for CDSL. Third reason is growing awareness towards investment. Earlier, people used to shy away from stock market. They used to invest in FD, insurance, gold, and other traditional ways of investment. But today's youth like to invest in stocks and mutual funds. This is also due to growing awareness among investors about the benefit of investment in Indian economy. This shift in investment preference would drive growth for CDSL. Fourth reason is ease of investment. Earlier, it was a pain to invest in stocks. Everything was in the form of paper and you had to call your agent and it required a lot of time. But now, investment in stocks and mutual fund is a matter of few clicks. Thanks to the growing fintech ecosystem in the country, there are a lot of players in investment space that provides the investment platform at negligible cost. It has attracted a lot of new generation investors in India. So all these factors would drive the growth of CDSL in India. CDSL has created multiple strategies to grow its business. It includes building the depository participant network, introduction of new product offerings, investment in IT infrastructure, and improving the operational efficiency and driving the investment awareness campaign, especially in tier 2, 3 and 4 regions. Hence, overall on future growth, I would rate it 10 on 10. If you look at the revenues, CDSL revenues have consistently grown from rupees 105 crore in March 15 to 344 crore by March 21 at a very good CAGR of 21.9%. CDSL profits have jumped from 44 crore in March 15 to 200 crore by March 21 at a very good CAGR of 28.7%. Look at the sharp rise in profit in last 1 year. This sharp rise is due to a sharp increase in total number of demat account and increase in trading volume. Overall, both revenue and profits have grown at a very good rate and hence on growth ratio, I would rate it 10 on 10. CDSL operating margins have been exceptionally high. It is consistently above 40%. The recent margins are 62%, which is simply brilliant. If you look at the ROE and ROCE, both ROE and ROCE are looking good. ROE is in the range of 15 to 20% and ROCE is in the range of 20 to 30%. The recent ROE is 22.8% and ROCE is 29.6%, which is very good. Overall, on profitability, I would rate it 10 on 10. If you look at the debt to equity structure, CDSL is a completely debt-free company. Hence, on debt to equity, I would rate it 10 on 10. Its reserves have increased from 265 crore in March 15 to currently at 773 crore and company is cash rich with a total cash balance of rupees 208 crore by March 21. If you look at the shareholding pattern of CDSL as of December 20, promoters hold 20% shareholding in the company. Banks and financial institutions hold 14% shareholding, mutual funds hold 8% and foreign institutions hold 6% shareholding. If you look at the top 5 shareholders, BSE is the largest shareholder and also the promoter with 20% holding. HDFC Bank has 7.18% holding, Standard Chartered Bank has 7.18% holding and Canara Bank has 4.4% holding and LIC has 4.4% holding. CDSL had its IPO in June 2017 at a price band of Rs 149. It got a very good response and it touched a high of Rs 400 in July 17. But then the share fell down to the levels of 190 by August 19. Since then, the share price has zoomed to the current level of Rs 973. At current levels, it is trading at a P multiple of 50x, which looks like on higher side. Having said this, there is a huge growth opportunity for CDSL in the next 5 to 10 years. Hence, rather than waiting for the right time to invest, the better strategy would be to keep investing systematically or keep buying on dips. So in this video, we did the fundamental analysis of CDSL. CDSL is in the business of depository where it holds securities like stocks, bonds, ETF, mutual funds, etc. in the demat form. It is the leader in depository segment with 58% market share. It has a strong competitive advantage due to its cost leadership, strong technology infrastructure, large distribution network and vast experience in the business. The growth prospect in the stock market looks very promising, where India is still in the nascent stage and has huge potential to grow in the next 10 to 20 years due to new demat account opening and increase in trading volume on account of very good return potential in the Indian market, increasing awareness and ease of investment. The financials of the company look solid with very high profitability and zero debt. The valuations of the company are on higher side due to high growth potential, but looks like a good share to invest for long-term wealth creation. What is your take on this company? Have you invested in CDSL? Do let me know in the comments. For more details on stock investment, you can explore my website.